Welcome to Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Thank you guys so much for the support you've given us on this show. We are also 2 of the 3 at unfilteredinvestor.com. And so many of you guys have gone over there and checked us out and supported us on that project. And we are eternally grateful. Bobby, Luis, our producer, picked up. Can you show? Because remember I said that I didn't have gray hair when we started this project, which was like 2.5 years ago. Luis, Can you show that picture to Bobby? Because I really didn't have gray hair 2.5 years ago.
I can't wait.
Yeah, look at that.
Oh my God.
Yeah. It's literally 2.5 years ago, and all my hairs are going great. I blame you people out there. I don't know who I blame. I blame everybody. I blame you, Bob.
I think I look better now.
I do think you look better now, too. You look more fit now. So, yeah, people change quickly. When you get old, you change quickly. Anyway, I hear that markets are having a difficult time with the CPI number. Do you think CPI number is an enormous deal?
I mean, it basically came in as expected. I think it, took a little bit out of the market for those that were afraid of a blowout inflation number.
Yeah.
But no, I mean, it was just a barely missed on the core CPI to the good side of things. We saw a little bit of rally there. There's the speculators out. We're back down to AI now sucks.
Okay. Well, this is interesting to me because, again, both that I think that we were due for this, and I was positioned pretty well for it. But then we got to know where it ends. But what I've said a million times to you guys out there is that you might think Bobby and I are full shit, and sometimes we think that as well. But the one thing you cannot argue is that for some odd reason, we get fantastic guests, and we have one of our favorites, Nancy Tengler, who is a principal of Tengler Laffer. And yes, I know it's called Laffer Tengler, but I don't know Art Laffer Jr. as well as I know Nancy, so I'm calling it Tengler Laffer. Let's bring her on. What baseball team do you support, if any?
The Giants.
You say, like, of course, the Giants.
Okay. San Franciscan. Yeah.
Okay. Yeah, I knew that. What about football? Same with the 49ers? You're there the whole way?
I mean, it's kind of all about whoever the cutest quarterback is. So
you guys you had Jimmy Garoppolo, who's my neighbor here. He's from the town over. He was the cutest quarterback by far, right?
Ever.
Yeah. I think he got that contract because of how good looking he was. Yeah.
Got a funny story about Garoppolo. My niece tutored him in high school.
Oh, because Jamal Prospect, right? Yeah.
Yeah. She went to high school with him and she tutored him. And I said, so, was he good in school? She goes, he was cute. That's all she says.
Yeah, my nieces went to high school with him, and you just bring up his name and they can barely speak.
I have a little known fact. So my kids went to school with Zach Ertz, and my daughter made the boys all-star baseball team for the 9-year-old season. So that was a trip. And Zach was on that team, and then he played basketball with my son. And all that we remember is that he just cried all the time.
He cried?
All the time, not just in Little League, but in high school. And then there was an actual interview about him after one of the Super Bowls, and they said, yeah, we've watched his tape and he cries a lot, so we're just going to go in and try. This is when he was playing for the Eagles. So yeah,
tight ends should not cry.
Yeah,
no, not big ones.
I want to know what makes him cry. Was it that he was disappointed in his own performance? Was he just so emotional about it? I guess so. Yeah.
Yeah. Anyway. Throw strike or whatever it was. Yeah.
Right. Okay. So Nancy, by the way, I'm so glad to have you here. Okay. Because I don't know if you heard the conversation before. At unfilteredinvestor.com, we, for the last probably 3 weeks, were saying that that the risk was to the downside, that it was now an asymmetrical risk to not, we had 2% on the upside versus 10% on the downside. Now we're here. Now we're in the thick of it. What do you think? This is is this a normal run of the mill correction, or do you think it could be something deeper than that?
Yeah. Well, it's funny that we were in the same spot, really. I mean, we sort of not called the bottom, but on April 4th, I wrote a piece that said that this is overdone to the downside. And then we got a really nice bounce, and then it got overdone to the upside. The whole, we bought Micron 2 months ago at $366 a share. And the bloody thing is, more than doubled in a very short period of time. So we began putting protection on our clients' accounts, and nothing's fancy, just some puts on. We actually chose the NASDAQ this time. Last time we did this was in February of 2020. And it's not because we think that the bear market is over. Bull market, sorry. This is a bear market. We don't think it is, but we think this summer is going to be, I think this is what it's going to look like. Super choppy. I don't know that you'll be able to make money in options if you're, not doing it full time like we don't. But I think you want to be protected and then use the weakness to step in and buy some of these names that I think will continue to outperform.
So instead of buying puts in the NASDAQ, I bought more puts in the SPY and put on a put structure in the SMH, the chips ETF, which
Smart.
I think is good. I think that covers it, right? I hope so. Yeah, that's because I think
that's smart.
Yeah. So Bobby?
Nancy, I've been building a small position. Now, the small position is in three specific names. It's IonQ, which is quantum, and it's in AMD, which I think is going to have some actual surprises for NVIDIA and the rest of the team out there. And it's in Tesla. Now, I haven't sold a thing. And I told a buddy of mine about this position I'm building for, a couple of weeks ago. And he called me this morning. He's like, "You out?" I'm like, "No, because I put tiny positions on because of how overdone we were." Right. My question to you, and I don't want a specific answer, which I doubt you would give me anyway, is it's time to start adding to that position, or do you think there's not a blow off yet to manage this?
Well, see, I'm not sure we're going to get a blow off. I think a lot of it depends on President Trump and Iran, and are we going to, I don't know if today's sell off was the CPI or him, the strikes in Iran. So
Right.
I think you want to keep adding. We own all three of those names. We have a thematic portfolio that's focused on space robotics, nuclear, and quantum. And by the way, for the record, is it quantinium or quantinium?
I call it quantitanium. That's made a word up.
I say that Q word.
Well, anyway, so we own IonQ in that portfolio. We also own Tesla in that portfolio and in our growth portfolio. And AMD is a personal favorite. I think you don't want to bet against Lisa Su. So I would be picking away at these names in the coming weeks. I don't know if you have to do it tomorrow. I think we're going to bounce around, but it feels a lot like what we've seen in the DeepSeek period, the tariff tantrums in DeepSeek, and then first quarter of this year, where you had all the narratives coming out, the traders, read the headlines. You guys know the stuff better than I do. And now they're heading out to the Hamptons, so liquidity is going to dry up. So I just think you use your, you just keep adding. We put NVIDIA in our value portfolio 2 weeks ago.
Oh, wow.
Oh, interesting. Because NVIDIA, what was that at the lows? It had lost like 25%, right?
Yeah, and then they raised the dividend, and so it's it's yielding 0.5%, but more importantly, it's trading at a 20 multiple. Next year's earnings growth is 87%. Right. I mean, do I want to own that, or do I want to own P&G?
Okay, no. Okay, so here's what's interesting to me, because a week and a half ago on Unfiltered Investor, healthcare from a technical standpoint was one of our picks. Okay. And XLV has done quite well. But my thesis was also that what if we're thinking of the AI trade a little bit wrong? And I want you to comment on this. What if we're saying to ourselves, well, these are the people who are creating AI, but that doesn't necessarily, in my mind, mean they're going to be the gatekeepers and the profiters from AI 2 years, 3 years, 5 years from now. Perhaps Anthropic has the best product out there, and the Chinese product will be half the price and 90% of the quality, and there'll be strict competition. Then maybe I think it's time to look at the sectors that will use AI to be more productive and profitable. And I thought of healthcare. Tony Nash did not like that, but it's gone so well so far. What do you think of that thesis?
That's been our investing thesis. The old economy companies that are pivoting to the new technologies, and then the providers of the picks and shovels. So yeah, I think that is exactly where you should be focused now. I just realized that whole thesis I completely stole from you. I was wondering where I heard it a couple months back. I swear to God, it's like, oh, as soon as you said it, I was like, yeah, that's where I got that idea. But anyway, continue on. But there's, if you go through the earnings calls like my team does, you're hearing management say stuff like, L3 Harris, we're producing 25% more revenue per employee than we were 2 years ago. Or in the Palantir call, they were saying that the Navy was now able to sort of bust through 25 days of bureaucracy in 15 seconds. My son's a Navy pilot. I was actually with him when he had to go through this huge bureaucratic morass when he was working for the admiral in the Pacific Fleet. And you watch the systems these guys use, it's circa 1980. I mean, it's unbelievable. So the value that we can add, or the productivity improvements that we're going to continue to see in other sectors, healthcare premier, other sectors that will continue to produce better drugs, solutions for healthcare problems. I think that's the way you want to play AI going forward.
So Nancy, before I asked the question I actually had planned to ask, you said there was a company that said they're getting more production out of an employee.
Yeah, L3.
Does that automatically mean that production costs them less? Because I'm hearing a lot about the amount of spend on AI and the production is increasing, but the actual production cost per widget or whatever it is, is not actually dropping yet.
But we are seeing it in margins, Bobby. I mean, we're at historic highs in terms of margins. You've got companies, and I'm not talking about how Microsoft is monetizing their AI spend. I'm talking about, old economy companies that are beginning to adopt these new technologies. When we started this thesis, it was digitization that everybody was talking about. Then it morphed to cloud, then it was AI cloud, then it was robotics. And I think it's amalgamation. I mean, if L3Harris, and Raytheon said something similar, American Express has said the same thing. They're adopting AI solutions, and it is making employees more productive. And then
so the proof is in the margins, right?
Seeing it in the margins.
Because I always feel right now I feel it's similar to when retail sales go up in an inflationary period.
Right.
It's like, that's not necessarily good news, but you're seeing it in the margins.
Yeah. Historic highs, 20%. Yeah.
Cool.
And what's also interesting is if you look at earnings growth and you look at S&P measures S&P PE, and then the S&P technology PE, we keep hearing this is 1999, but the difference in the price earnings ratio forward, 12 months forward for tech is just 3 percentage points higher than the overall S&P. In the 1990s, from 95 to 99, it was over 20 percentage points higher.
But again,
so you had earnings.
And this is a question. Is it because there's so much tech in the S&P?
I mean, that is certainly part of it, but it was a big chunk back then too. And you're seeing earnings growth. Like back then we saw earnings growth from 95 to 99. I think it was like 67%, but the market actually went up 220%. Right now we're at like 85% earnings growth, or 80% earnings growth and 85% performance over the last 5 years. So I think there's room and it's not just technology as we're discussing, it's healthcare, it's financials, it's industrials, where these companies are really pivoting to the new technologies.
So you were on our show a couple months ago, maybe, and you gave a couple names that I actually bought and held, and I think one of them was like John Deere was using AI quite well. What companies do you think people aren't noticing that they're revamping their entire model by using AI? And people are like is a company like Walmart still something?
Yeah, I mean, that was our poster child. And
that's the one too. I have that one. Yes. Right.
Yeah. I think it was longer than that. And I hope you made a lot of money on it.
I did. I made good money on it. I appreciate it. Yeah.
No, that's what we do. That's a great question.
Or a sector. I said healthcare. What's a sector maybe that's going to be redefined?
I do think industrials. We keep hearing that the ISM numbers. I think we're 5 months in a row of expansion, and new orders were really strong this last month, and yet we have 450,000 manufacturing jobs that are unfilled. So I think you're going to start to see robotics play a bigger and bigger role in the industrial space. It already is, but I think that's one area we own in that space. We own two of the sort of enablers, so GE Vernova and Quanta Services, and those have been monster performers. But we also own Eaton, And we own, the tech names, or I'm sorry, the defense names I already mentioned. So Raytheon and L3Harris.
You just said something that jumped out at me. You said there's 450,000 unfilled manufacturing jobs in the United States. Yeah. Where does that come from? Is that embedded in the JOLTS numbers, or where is that?
That's on the BLS. It's just in the jobs numbers. So if you go to the BLS, type in, manufacturing jobs open. The last time I looked was a couple months ago, but I mean, it's not like there's been a huge amount of hiring.
That seems significant. That seems huge. So yeah, I love that.
Okay, it does me too.
Quanta, which is PWR. Is that the right one?
Yes. Yeah.
Just filled the gap from April 30th, April 29th to April 30th. So those of you that are gap traders, now might be a time to look at that if you want to play around in some of Nancy's picks. So the question I was going to ask before I asked the follow-up of what you said, the sell-off started coincidentally the day after they dumped the pattern day trading rules. Two questions to that. Retail's been a much bigger player, obviously, in driving market moves, mostly higher. But do you think they might have been a bigger player in this sell-off because of that? Because they can obviously use more leverage now than they were. I think it was 4x now instead of just your regular Reg T margin, right? And the pattern day trading rules are gone, so they can trade over and over again with no issues. They might have been buying, selling, and there's no rules to stop them. And on top of that, do you think this is the type of sell-off? I know retail is not really your thing, but do you think this is the type of sell-off where retail traders might be like, well, shit,
So that is so interesting. I didn't know that. But it makes sense, because if you look at the two biggest players in the market right now, it's share buybacks by the companies and the retail investor, and the institutional investor is basically gone. So pension plans, some of the insurance company money, that's Brian Reynolds' work. I don't know if you follow him, but he pretty much called the 2008 bear market ahead of time. He focuses 100% on credit, and his position is we're far away from a bear market because there's so much demand for credit. And what was interesting in his last piece was that tech as a percentage of credit, I'm going to come back to your question, but tech as a percentage of the credit market declined in May to 6%, whereas it's 38% of the equity market. So that is one of the things I think underpinning all of this from the share buyback standpoint. But the rest of it's all been the retail investor. So that makes perfect sense to me, what you're saying. I hadn't even thought about it, didn't know it, but yeah, it fits with the research that we read.
Yeah, by the way, that's not intelligence. I just made that up in my head. Jimmy, do you mind if I ask Widge's question?
Sure, yeah.
Widge says, do we trust the quality of the earnings?
And Nancy, first in your head, describe what he means by that. What are low quality earnings versus high quality earnings?
In our world?
Yeah, in your view, yeah.
I mean, where there's a lot of adjustments and write-offs and you know, the typical stuff.
Accounting sleight of hand kind of thing.
A few years back when Tesla stopped paying the bills in order to make earnings, when they like delayed bills for like a quarter in order to make earnings.
We did that at Laffer Tengler. We would never do that at Tengler Laffer. But in the early days, we had to.
We've heard of it, right? Yeah.
Shift it around.
Yeah, just a little shell game. Yeah, I think the quality is pretty damn good, and that's also showing up in the margins. So if you look at how companies how they're reporting, what they're reporting, it's not like in the 90s when we saw all sorts of write-offs. There's concerns about the circular financing right now, but there's a lot of difference than there was then. I was managing money then. It was a very different environment. But yeah, I do trust the quality of the earnings, at least in the companies that we're focused on. And that's large cap kind of industry leaders. So I do. Yeah.
So when I look at corrections that I guess we're now in a correction, we're off 5. I don't know what the definition is because I don't care what the definition is, but okay, we're trading lower. And I always worry about 2001 and 2008, which people of our age, anytime something happens, we do get a little bit of PTSD flashback, I think. And I again, the leverage, and not just the institutional leverage, but the mom and pop leverage in both those two eras was astronomical. Is there a way to measure that? And is it even going to provide any value at different times of the market? Like before we started this, was it anywhere close to any of those places?
No, I don't think it was. So we look at margin usage and margin,
Right.
not just for our clients. I mean, I'm proud to report I'm the biggest user of margin at Laffer Tengler.
Nice.
And I try to keep our clients from doing that. But yeah, I think it's, again, I don't think we're there. I don't think we're bubble territory.
Yeah.
You know, if you look at the AAII and use it as your contrary indicator, they're not super bullish now. They're not. So I think there's opportunity. There's cash on the sidelines. That's why I think this is it's not a run of the mill, maybe correction, but I think it will be a pullback that'll feel really crappy, and then we'll move forward. And pretty soon you'll start to see us working our way out of it. I did want to go back to the earnings question, because I don't think I answered that very well. We use relative price to sales ratio in growth stocks. And the reason for that is because you can drive a truck between, stated earnings and GAAP, or any of the other variations. And so that's why we use sales as our valuation metric, because if you manipulate sales, you do go to jail. I mean, we have seen that. So we wanted something that was reliable. But if you look at the earnings growth, it's pretty robust. And the balance sheets are further a testament to that on many of these large cap companies.
I'm so glad you went back to that, because that's a fabulous answer, Bobby. Yeah.
By the way, Jim, the technical correction is 10%. Lately, people have said 8 to 10%, and I think that's a function of people just wanting to buy the dip quicker.
That's what I think too, which is why I don't listen to any of those old wives' tales about what is what. A bear market's 20. I don't give a shit what other people call it. Yeah.
As of the approximate close today, it's proximate because I'm looking at the futures. We're down 7.45%. We hit down 8.37%
in the
NASDAQ. Literally touched the 50-day moving average in the NASDAQ futures. Let's see if it was exact. The low is 28.227.75 on the day the 50 came in at 28.278.15. So we basically hit the 50-day exponential moving average, bounced, and now today we didn't even test it again. By the way, today's low is not as low as yesterday's low, but we haven't gotten up. We haven't gotten that rally off the low that we had yesterday.
The S&P did close below the 50 exponential moving average. Bobby, does that change your attitude about things?
Not on the futures, we didn't. If we did, yes.
Oh, okay. Yeah, oh, no, you're right. I was looking at it incorrectly.
Yeah, no, on the futures, we didn't close below. Again, I use the exponential.
Right. Can we take
a
quick timeout? Luis, Can you put the banner up? It is the time of the show where I ask a favor to you guys watching. Please scan that QR code and try Tradier Pro for 3 months for free. We've been talking to options traders who've been doing it for decades, and others have been doing it for days. They all say the same thing about Tradier Pro, and that it is the gold standard in options platforms. And again, if just as a favor to us, even if you don't intend to use it, please scan it so Tradier thinks we have some pull over the people we talk to. So just there. Okay. And don't tell them I said that. Oh, crap. Yeah, it's live. Anyway, back to the show.
Nancy, do you have any opinions on Bitcoin at all? And if you do, what happened to Bitcoin, and did anything actually happen? Now I sound like one of those guys when the NASDAQ goes down 8%. I'm like, what's happening?
But it did act weird. It
really did
recover with risk assets. So here's one for you. We had a bunch of clients come to us and they wanted a strategy. And so we top ticked it for them and put in place a digital asset strategy.
Oh, you top ticked it the bad way. Right, okay, right.
And so I'm painfully aware of, and we're closing out our positions. I don't know. I think the IPO market has stepped in to appeal to people's risk appetite. I do think that our thematic portfolio, we bottom ticked that one, by the way. It's remarkable. It's up more than double the S&P in a very short period of time. But it's capturing the imagination. And I think space, it's not just the SpaceX IPO, but I do think we're going to see more from Anthropic, obviously. I don't think that, I know that. Anthropic and OpenAI, much less interesting to me than Anthropic. But I think that's really what happened, that there was a better place to be.
Yeah, and it's zapping up the speculative liquidity is going to IPOs and all things. I mean, we rallied the NASDAQ off those late March lows unbelievably. You said Micron, AMD doubled in value. It's hard. Everything can't double in value. The speculative liquidity goes somewhere, and it's getting lining up for IPOs and going into AI. But anyway, I didn't mean to interrupt you.
Yeah. No, you're 100% right. So I do think that's really what's happened. And, you know, it's kind of, I mean, I know it's an important technology, the blockchain, but I think when a number of the Wall Street strategists came out and went on boards of Bitcoin miner companies and so forth, that felt like a top to me. And so anyway, we don't really play in it. I think I mentioned we were able to top ticket for a few clients that really wanted it. But yeah.
I have this idea that it did not fulfill the promise of riches and what half the speculators wanted. When the original sort of Bitcoin people, that wasn't the point. It wasn't that you were going to get rich on it. I had somebody propose to me, I should say posit, that's the right way to say it, right? I had someone posit this theory that a lot of this selling over the last 3 days is large, high net worth and institutionals selling winners to get big parts of the SpaceX IPO. Ooh. Have you heard that? And do you buy into that at all?
100%.
Yeah.
Yeah, I did. I've heard the same thing. You know, it's 4 times oversubscribed. You got Jamie Dimon out there hawking it to their high net worth clients, which feels very egalitarian to me. So I have a call into Elon to say, hey, what about the rest of us? I got invited to the We Robot event, which was where he unveiled the Cybercab. And I had this moment of, I think I've made it. I think I made it.
I love that.
The cool kids club. And then I got there and it was me and like 4,000 retail investors and Dan Ives.
You are the cool guys club. There's no question about it. By the way, I never once thought of the sell-off being related to the SpaceX IPO until you guys just mentioned it. And I hate that. It makes me think I'm losing my edge because yes, of course, that's probably part of it. Which, by the way, Bobby and I, Nancy, I want to know your opinion of this too. Because I proudly say that we don't cover it on unfilteredinvestor.com. We cover much more boring names that are undercovered. But the SpaceX IPO, I will never get involved in something that has no price history, to me, it seems like random, throw a dart at a board to figure out what that price is supposed to be. And the price maybe is supposed to be much higher than it's going to IPO at. I don't know if it's going to go on that ride. It's got to go without me. Is this something that you want to allocate clients to get part of it? What do you want?
I do. And here's why. I share your view of the world in that regard. And so, you know, I boycotted Amazon for a number of years because there were no earnings and I couldn't figure it out. And that was a huge mistake. And then I owned Tesla early days when he was sleeping on the factory floor and was days away from bankruptcy, going on the Joe Rogan podcast, smoking pot. People were leaving in the C-suite.
How did he not go to jail for saying funding secured, by the way? Only people like us go to jail? Anyway.
Only us. Yeah, the not cool kids. That's my point. Yeah. And I had a double. So I thought, hey, this is now gambling. It's not investing. And then it went up fourfold. So I think with what I've learned over time, if you go back to the beginning of the Amazon IPO, it's up 275,000%. Last I looked. And so I think with narrative names, sometimes you got to plug your nose and jump in. And this is most definitely not a company you're buying on valuation. You're not buying it on earnings because there aren't any. You're buying it for the promise of the future. Call it gambling, but we definitely need to own it in our thematic portfolio. We own Rocket Labs and Planet Labs, both of which have gone just like this, which is why why I believe that that's where the funding is coming from people taking gains and winners. And that drove the sell-off.
So here's, by the way, I have never, ever participated in an IPO before because I'm mostly a technical trader. I don't even know how it's done. And I've split up my money at 3 different brokerage houses because I don't want, I know that it's segregated funds when you have it in stocks, but I don't want, if they go bankrupt, I don't want to have to fight with them for 6 months to get all my positioning. I know that's probably ridiculous, but does that work against me then? If I had it all in one brokerage house, does that make me a bigger shooter that I could possibly get? Who gets allocated the IPO? What are the rules?
No idea.
Okay.
We've tried. We've reached out. We've tried. I mean, you saw the article that the Middle East funds are in there, subscribing for billions of dollars.
Yeah. So I guess, they don't care about me.
Or me. Yeah. So I think you have to buy it in the secondary, or you had to already buy it. And we explored all that, through buying private shares from insiders, and the fees are just too high. But no, I'm with you, Jim. I think when there's a spin out, I hate having all those little bits, and so I usually sell them, and that's usually the best part of the spin out.
Right, right, exactly. Right.
Yeah, so it's not logical, but
yeah.
I think if you want to have your stuff split up in 3 different places, that's what you do. It's not going to matter. You wouldn't get any shares anyway.
Right. Okay. Good. By the way, are you standing up right now? I just noticed that.
Yeah.
Do you stand up all day long?
Pretty much. I hike in. I hike in the mornings. You noticed I got all dressed up. I did get dressed up last time.
Yes, so did we.
Oh shit! I'm losing my power. I think I might have a power outage here. By the way, so you guys know.
No problem.
Yeah.
It'll be great news for me and Nancy. No, I dressed up for you too. This is one of my finest black T-shirts.
It is. It's lovely.
It's very shiny and black. So just so you guys both know, I had a very inexperienced trader, super nice guy and a really smart guy say to me today, he goes, yeah, I might be nibbling in it. Robinhood is promising shares to everybody that wants them in SpaceX, but they say that we have to accept like a $50 play in the price. So I'm just not comfortable with that. And I'm thinking, okay, so Robinhood is selling you the ones they've been allocated. Exactly. You're not actually getting in the IPO. All right. And this is the funny thing that, I no knock on Robinhood at all. I've actually.
No, we love you, Q. Our friends run Robinhood.
Yeah, we have friends there. Obi is there, and JJ's there. No, not JJ.
Q.
Q is there.
Right.
Somebody else.
JB.
JB. I knew it was initials, and I couldn't get it.
All the initials.
And they're great guys, and they're very transparent now. Before our friends were there, though, they used to say it's free trading, right? It's free trading when everybody else was charging. It wasn't free trading. And now they're saying, I suspect that the person I talked to didn't really understand the truth that Robinhood told them. So I'm doing this for him. Anyway, I'm with both of you without some sort of price action. My example is always the Facebook IPO, which turned out to be an absolutely fine, phenomenal stock. But the IPO was weird. It went bad, right? And there's no guarantee this the SpaceX one can't go bad, which brings me to part of that 3-stock thesis that I told you. And Jim's aware of it. He did it too. I don't know if you're still in those, Jimmy.
Just Tesla and AMD.
Yeah. I bought Tesla thinking like, if this thing is gangbusters, first of all, is it naive to think that they won't share IP? I think they will share IP, right? Even though there should be a Chinese wall. Come on, Elon, it's all in his brain, right? So number one, so I said, okay, if SpaceX does great, Tesla is going to go up a little bit in sympathy, and that's part of the ones I want to build a position in. Second, Tesla's a robot company right now, right? They're doing robots and the Roadster, and that's pretty much it. As a matter of fact, for all you people out there, if you had an interest in buying a Tesla, the deals are unbelievable right now. They're trying to empty out the showrooms to put rockets in them, from what I understand. I'm sorry, robots, not rockets. What do you think? Yeah, I said, go buy a rocket so I can get to Chicago in 4 minutes when I leave here. No, so what do you think of that thesis? Do you think Tesla will go up in sympathy with SpaceX, or do you think it's separate enough where they won't?
No, so Bobby, I think they're going to merge them.
Heaven. Go ahead.
Great. Yeah, they're great for us. Yeah.
So we own it for the robot in our thematic, and then we just own it. The energy storage business is pretty compelling too. That's what's been driving growth in earnings. The mega battery pack. I went to the factory, and it was one of the coolest experiences. And I'll tell you this: everybody that worked there loved working there, because if they weren't working there in the California, farmland area, they'd be picking fruit, and they were, they had options. They drove cool cars. They loved the culture of the company. And that was
so
one
cool.
of that was when we added to our positions. We initiated when he was selling his shares, reinitiated selling his shares to buy Twitter. And then that was great. We had a $100 entry point, and then we've added and trimmed ever since. But I think your thesis is right, but I think it goes further than that. I think he will probably merge it, and that's how he'll hit all of his pay package goals and objectives, by combining the companies.
I'm pausing to see if I could buy more Tesla in the post market.
For your lips to God's ears, is that the expression? Whatever it is, but I like whatever you're saying. Okay, so Jensen Huang gave a speech last week when he talked about bringing AI to PCs. Now, I don't even understand the concept. I thought the AI part of it, the AI was the massive data centers. Can anyone of you two, do you know what I'm talking about? Can you explain it to me? What does he mean? Are we supposed to buy the hardware companies now? What do you think, Nancy?
What did he say? I missed it.
He said that AI, he sees that AI is going to become like on your personal computer, not like going your personal agent. So privacy, less latency, things like that. What does that even mean? Do you know?
Yeah. It means that he has a bunch of clients that he talks up all the time. And so, if you listen to him, he reminds me, like in high school, friend to all, Jensen Huang. Like, he's everybody's buddy. He's, talking up, everybody except for AMD. He's talking up his book.
But Marvell, he's a good friend to them. They went up 30% just from a pat on the back from the dude. Yeah. Anyway.
Yeah.
Right.
So I think, and I heard somebody say, wouldn't it be funny if after all of this, that Apple performs the best out of every company by not doing anything.
Yeah.
But and being behind. But that is what they're going to do. It's going to be on your phone. And so I think that is what he's talking about. You're going to have your Dell computer, and it's going to be enabled. And data centers will still play a big role, but they won't continue to expand exponentially. And then you got Elon putting them in space. So
perfect.
There's a lot going on. Yeah.
Nancy, are you from California? Is that where the San Francisco Giants thing comes from? Because your offices are what, in Arizona?
Yeah, I was born in San Francisco,
okay,
and lived there for like the first 50 something years of my life, and then moved to Scottsdale. I went to a Diamondback game, and every time they hit a home run, they have this little Diamondback rattlesnake that goes around the edge of the stadium, and it freaked me out, so I never went back.
By the way, have you ever been to a Diamondback game when the Cubs are there?
What's that?
Have you ever been to a Diamondback game when the Cubs are visiting?
Only in spring training.
Okay, because
Scottsdale
is a suburb of Chicago. It's just our furthest western Chicago
I'm
suburb.
aware.
Oh yeah, so
she lives there, dude.
Yeah, the coach of the Diamondback. Oh yeah, you live there. I forgot. I'm sorry. I've been concentrating on my power flickering on and off, so I'm sorry if I wasn't paying attention. But yeah, I was about to say, there was a coach of the Diamondbacks who said, when we play the Cubs, we like to score early just to take the crowd out of it. I'm like, Jesus, it's your home stadium. But anyway, Bobby, what do you got?
We have all the Midwest restaurants except for yours.
Yeah, exactly. Yeah. All the Midwest restaurants. Portillo, Dick Portillo, Pioneer, right?
Yeah. But just for the record and for the tax bureau, I actually live in Incline Village, Nevada.
Fantastic.
Fair enough. Jimmy lives in Florida. So the reason I ask you is, this is really off the subject. I probably shouldn't be asking this, but do you have any opinions on, I'll call them the statistical improbabilities that went on in the mayor's race in LA and the governor's race in California? I'm not going to call them impossibilities. I'm going to call them statistical improbabilities. You have any commentary on that at all or no?
Yeah, I do. I mean, one year, so you're not allowed to show your ID when you vote.
You're not allowed to show your ID. That is just blowing me away. Okay.
I used to go, and it was in our neighborhood, right? So we knew a lot of people. I'd go with my license. They go, that you can't show, we can't see that. So then I went with my passport, and they couldn't do that. So then one year, and my husband has passed away, so I feel like I can say this. My husband voted twice. He voted as himself, and he voted as our son. and nobody noticed. There wasn't any, and that goes on all the time. So if you add in the mail-in ballots, it's so predictable, it's ridiculous. And I think I don't, I don't like to traffic in politics in our business, but
yeah, I don't either.
Fraud is very clearly a part of the California voting structure.
Mm-hmm.
I think in the last 30 years I lived there, I never voted for anything that passed.
Mm. I'm actually kind of glad Jim's power went out for this, because every once in a while I tell him something and he's like, I didn't know you were smart. And we both kind of laugh about it. But I was thinking about that and thinking about, I know he doesn't listen to this show. I'm going to go to dinner with a friend of mine because my wife's at work and he's hardcore left, and that's fine. Right. But he's already texted me. I knew that, I don't even know her name, would make a comeback.
Karen
and
Bass.
And I texted him the press conference where somebody asked Gavin Newsom what happens if 2 Republicans are at the top. That's actually a possibility this year. And he goes, well, we have a break the glass plan for that. And I was like, that's like me saying, yeah, my wife died in a car crash where I was driving and drinking, but I got a plan to make sure nobody knows about that. Yeah, that was probably a little harsh way of saying, but it was just so, it was such an admission of these things that it was bizarre to me. And
they tell you who they are on both sides of the aisle,
Yeah.
They do tell you.
You know who Jonathan Swift is? He wrote Gulliver's Travels.
Oh, that Jonathan Swift.
Yeah,
yes.
That Jonathan Swift. Yeah, you should be a market person in this conversation, but he's not. And he said years ago that you cannot actually, the original quote was, reasoning will never make a man correct an ill opinion, which by reasoning he never acquired. Right. And I always think of that quote, and that's why I have it in front of me, because I've been following that. I used to live in Pacific Palisades in LA. I lived there for 4.5 years. And the house I used to live in actually burned to the ground in the fires. So I doubt it's rebuilt. But it's often cited as you can't reason people out of something they weren't reasoned into.
Right.
And I think of that whenever people think that, we'll get back to markets in a second, guys, but whenever people think that a situation like that could somehow be legitimate.
Yeah.
Because they have no evidence of it, when they won't allow it to be investigated and they won't allow you to show your ID.
Right. They won't. And then you've got the mail-ins, which, we know about ballot harvesting. And we know that goes on. And California is, it's an old machine, and it used to be different. But now there are no controls because it's so super blue. It's a super majority. So there's not a lot that people can do. So yeah,
it's crazy.
I don't miss it.
Okay. So back to markets, this particular sell-off, a lot of people that I'm talking to lately have called me up and said, is this the one? And I sit here and I think, what do you guys mean by the one? What do you think that means? Are you getting any of those kinds of calls?
Well, we've had calls with all of most all of our clients, the largest clients, talking to them about this notion of providing protection. We communicate a lot with our clients. And they know what we're thinking about all the time. I don't think, though, to answer that, I don't think it is the one. And I think by the one, they mean, the 2008, 2009 bear market, which was violent and long and difficult. I don't think we're there. We're not in, usually bear markets are preceded by a decline in earnings. And that usually drives recessions. I don't see any of that on the horizon for the next couple of years. This really does feel a lot like the good parts of the 90s, where we had productivity driving growth, and you had higher interest rates and higher inflation. Inflation averaged 3% during that decade. The 10-year was at between 5 and 7%. And that was an environment where you could have robust stock returns coexist with higher interest rates. So I'm hoping Kevin Warsh is more Greenspanian than anything else, because Greenspan understood all of that.
So I want to bounce something off you about Kevin Warsh, but I was watching Cameron Dawson on Bloomberg last week, and she was actually on our show on Monday, and I asked her about it. And she basically said, I'm paraphrasing, and she watches sometimes. So if I'm wrong, text me that I'm an idiot. She said something to the effect of the Goldman Sachs unprofitable tech index actually had reached like a 15-year high. And that's really the section of the market that looks like 1999 as opposed to the whole market, which happened in 1999. So I took that to mean that there could be, decent sized corrections, but it still wouldn't be the end of this. Would you agree with that in general?
Yeah, I mean, I didn't know that. That's very insightful. She does a lot of work on that, on the under, the surface stuff, which is really helpful. Yeah, I don't see it. I mean, and that's why I was citing for you the PE spread, which is not huge, the earnings growth as it relates to price performance, and then you've got the balance sheets. And I mean, Bobby, these are fortresses. I mean,
unbelievable.
And then you've got Google, issuing equity, and they raised it, and nobody cared. So I think
it's CapEx driven too, right? I mean, there's so much capital expenditure right now.
And it's one big beautiful bill act driven. I mean, I hate that stupid name, but if you think
I wish it could be called something else.
Yeah, it makes me feel like a child. But if you think about what corporations are being incented to do, they're doing it, and they're doing it in the US. So I think it's, I don't know if it's 2 to 3 years, but I think we have an extended bull run, and we're going to be very happy that we stayed fully invested.
So I got 2 questions, 1 comment, and I don't think the other one's a question either. From Widge is our regular, and he's one of our brightest viewers, just an old school guy, even though he's younger than us. The first one says, the second mouse gets the cheese. I like the notion of avoiding all the upfront spend and just taking advantage of the technology when it's cheap and mature. I think it's a smart comment. Second one is, this one surprised me a little bit. Widge, if you want to add to this, feel free. I'll take the 3% inflation if we also get the 5% Fed funds rate that went with it. Okay.
And he's right. That was the Fed funds rate.
Yeah. I mean, I know that he remembers that, number one, and he's been talking about artificial low rates for a long time. As a viewer of the show, he brings it up all the time. So I'm guessing that's where he goes with it.
And especially real rates.
Oh, that was the reference to the 90s. That's so, Nancy, you're spot on what he's pointing to. That was the reference.
Yeah, 100%. It was a 5% Fed funds rate. So you could actually make money in your savings account. Mortgages were a little more expensive, but we were all making money, and we were making it, we were getting raises, big raises quickly, and our stock portfolios were going up dramatically.
Yeah. So I have a last thing, and Jim didn't get to put his stuff in between this, but you'll see that I have an old school to-do list here. And, I fill this thing out every day, and I scratch things off as I'm doing it, because otherwise I don't do this stuff. And down here I have Ask Nancy. So I want to ask you about this particular theory of mine. Kevin Warsh is not a dovish guy throughout history, right? Through his history as a Fed governor. And Trump wanted rates lower. He's wanted rates lower for a long time. That seems to clash with the idea that Kevin Warsh is the new Fed to me, and that Trump, is the one that appointed him. I thought that's weird, By the way, I always dated short, dark-haired girls, and my wife, who I'm out of my mind for, is a 5'10" redhead with blue eyes. So that's like Kevin Warsh and Trump, right? I said, what if Warsh turns wildly dovish if Congress flips blue in order to help J.D. Vance or Marco Rubio, whoever's going to run next, keep the White House? But if they somehow do keep Congress, Trump goes, do what you want. We got Congress. We'll make a lot of things happen. We'll drive the economy, which, by the way, I think personally, I don't like everything that Trump did, but given the same choice, I vote for the same person currently today with what we know now, given that same option between President Trump and Kamala Harris. So what do you think of this theory that he turns wildly bullish and finds reasons to cut rate, even if it's just 25 basis points, if they look like they're going to flip the House, or if they're flipping the House, Congress entirely, or no problem, he just allows them to do what he thinks the data would determine?
I don't think you're wrong, Bobby. I mean, I think that the Fed has become so political since Volcker and Greenspan. I mean, all of this chatter, like if all Kevin Warsh does is shut up all the other Fed presidents, that would be, in my view, huge for the markets. You remember, we only used to hear from Greenspan, and we never knew what the hell he was talking about. And then Wayne Angel, that was it. And so I think we have to say it's not independent. I find it so rich that Powell talks about how he has to protect the Fed when he waited 6 months to hike rates so that he would get reappointed. I mean, there's no question that was.
There's no question that happened.
And then cutting right before the election, like, why? What was the data? Because we were following the data. I wrote so many pieces about him. Not the least one was Mr. Magoo's Washington. The other one was it's time to replace the Fed with Chat GPT, because at least Chat GPT learns from mistakes. And I interviewed for a position at the Fed. I think it's a horrible job, and I think it's kind of a ridiculous institution. I'm just going to say that.
I have a friend who worked at the New York Fed and another one who worked at the Chicago Fed, and they both said the same thing. They go, "Oh, yeah, we're not independent at all."
No, and then you get 450 economists that are plugging in the numbers to the model, and it's got 500 inputs, and they're not even using it. So
and they're wrong.
And they're wrong, and wrong, and wrong. So do I think he would do that? I don't think that's beyond the pale. I think that's entirely fathomable that would be the situation. I'm with you. I don't like the whole government takes a stake in Intel, takes a portion of NVIDIA's, gets some portion of rare earth. I don't like the combination of government and private sector that Trump has put forward. But the tax bill alone,
that was great.
Will drive economic growth for a very long time, and will help the lower income cohort, which is should be the whole point of public policy. And that's where the Fed really screwed people. And when I interviewed at the Fed, the guy quit the next day. He was the undersecretary of the Treasury. I think it was around the whole James Comey thing, and people were fleeing. But he said to me, "Look what we've done for America. He was an ex-Goldman Sachs guy. We've cut interest rates so low that risk assets have outperformed." And I said, "Well, not if you were a retiree that was planning on, 5% bond returns or interest on bonds." I lost the interview right there. I said, "No, now that guy's working at Walmart as a greeter because he can't get any risk-free return on his retirement assets." But
I'll tell you,
that's not how Goldman Sachs sees the world. So
this show is going to get reposted multiple times by my guy Widge. He is just like so happy right now. He's doing the Trump dance in his house or something. By the way, I don't think he's a MAGA guy. He just likes everything you said. And the Trump dance is the happy thing for me.
It is pretty cool, though.
Yeah, whenever something is happy, I do this dance now. I just do it all the time. She is Nancy Tengler of what is now Tengler Laugher, from what I understand. By the way, this show just got imminently more good looking when Jim dropped off, and now it's just me and Nancy. We have just a set in stone rule that if the other guy gets out, it's usually me because I'm in Florida and there's power outages constantly this time of year, that they will rip the other guy to death until he gets his power back on. So this is now a show of two good looking people and no troll on the other screen there. Luis, put up the banner one more time. This is a sponsored show, guys. Tradier, who basically is a futures market broker, really specializes in options. They have stocks. They have the whole gamut of investable assets. If you are a retail trader, especially if you're an options trader and you're not using this, we had Jay Soloff on a couple of weeks ago. Jay Soloff is purely an options trader. When we put this banner up the first time, he was like, "Oh, funny, I use them." And he is an options specialist. He used to be at the SIBO. This is a sponsored show. So if any of you have any capacity to scan that, try it for 3 months free, and then dump it if you don't like it. I don't care. Just let them know that we're reaching you guys, because we get to bring you people like Nancy Tengler because of Tradier. Nancy, if no one knows who you are or hasn't seen you, they're not awake. But if anyone wants to find you and possibly communicate with whoever you have behind the keyboard that does the work while you're doing all that great market work, where do they find you?
Oh, it's LafferTengler.com. And then we have an ETF, TGLR, get it. And it's coming up on its 3-year track record, and it's just pounded the market. So we'd love to have you join us in that.
That's amazing. I actually didn't know you had an ETF till just now.
Yeah.
I'm going to start accumulating that now too, just so you know. I'm
not good at self-promotion. I'm really not. And when they wanted to name it TGLR, I was like horrified. So,
TGLR. Yeah. I'm going to put that up on the screen before every show from now on. No, that's a lie. That was actually just stroking you. But Nancy, thank you so much for being here.
Thanks for having me, Bobby.
And thank you to the power in Illinois for us losing Jimmy.
I know. I never liked him anyway, so tell him.
Who does?
I love being on Kudlow's radio show with him.
No, he's a lot of fun. Nancy, thank you again. Really appreciate it. Yep, guys, cheers. We're done with the Trader's Edge. We'll see you soon.
Okay.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.